Okay, everybody. In this video, I'm going to talk about the euro. Um, Big part of why I'm going to talk about the euro is because basically, if the euro continues to slide, there's a good chance that the market's going to continue to decline, and so it's a very important market. I also haven't spent a lot of time on it. I usually just look at the dollar, but I want to look at it more from the bearish point of view, because basically the way this market goes is probably going to dictate more what the dollar does than vice versa. I'm going to look at the daily chart first on the euro, and as you see here, we put in a potential we're put in a potential inverse head and shoulders here. With if it can break the 124 area on a closing basis, I think you could run to say 129 or so. The problem is I don't think it's going to happen for a number of reasons. I mean, the stochastic is above 80 right now. You have 82 and 82 reading. Black line is pointing down, and you're losing momentum here. You can clearly see the histogram has been ticking down for the last several sessions, and you had an outside day down candle today. So and the MACD looks like it's kind of curling here, and that is reflected in the histogram action too. So if you get a break of the 18-day moving average on a closing basis below 122.06, this market's probably going to head to new lows. So I mean, I think if it closes above 124, you can get long it, and if it closes below that 18-day, which is 122.06, you want to be short it. And if I had to bet right now, I would bet that it breaks to the downside, especially because of the way the market looks and the fact that this market, look at right here. I mean, you got the RSI. You got like a double top in the RSI, and basically just showing that this area is being sold pretty heavily, and you have the 45 days also declining pretty rapidly. That's going to be another resistance level for this market, and you have the MACD below zero, and it could be about to cross. And then the next, you know how bearish the MACD crosses below zero are, as you can see here. You had the last one happen over here. You went from 136 to 119, so you could get a move from like 124 to say 109. I think is supported in euro. But I'm going to look at the other time frames for the euro. The monthly, as you can see here, those that are interested in where the euro is going to go longer term, you can clearly see the head, shoulder break of the neckline with a huge candle right here. You have a cross of the 18 period below the 45, and right now you have an up candle, but this histogram is still ticking down. And stochastic is oversold on the monthly time frame, but you have a negative. The MACD took out its prior low. It hasn't taken out the 2001 lows yet, but that's that area down there. I mean, that's 85 for the euro. I mean, some people are talking about a target of 90 eventually. As you can see here, there'll be a lot of support here because this was a prior breakout point for the euro years ago. But this market, that head and shoulder target, like I said, you take the difference between the neckline and the head, and you have a target of about 90. So that's actually where the 90 target comes from. And these head and shoulder patterns are usually pretty reliable, especially on this kind of time frame. So it looks like this euro market is going to be heading lower, and in the daily time frame, as you can see, it didn't look too good either. In the silver market, before I was bullish PAS and gold, I took out of that, and this market has been just a chop fest. And honestly, I would not be in the bull camp here. I know you just had a cross of the 18 above the 45. You keep having this market trying to break out, and then it gets sold pretty heavily, and that's what happened again today, except you actually made even like a lower high this time, and the RSI, you made a lower high too, and it's coming down. So it's going to be interesting to see if the 1820 area holds. You can't really go long there because that would be below the 18-day moving average. So and the histogram is ticking down, and you got a stochastic reading still in the 60s. So this market, if I had to guess right now, if the market's going to come down, I think it's going to be treated as industrial metal. And being that gold got hammered today too, gold could be susceptible to correction also. I have a feeling that the market may break to the downside. I don't like markets that are trying to break out and keep getting sent back. It's a sign that there's a lot of selling pressure, and I would be honest with you, I would stay to the sidelines. I would not short the market. You're still above the 18-day moving average, but I also would not be rushing to get long right now. I'm on the sidelines right now. Hands are in my pocket, and I'm waiting for the market to tell me what to do in this market. As far as the gold market, it's the same. It's a little more bullish because you do have the inverse head and shoulder breakout, and it does give you a target to the 1300 to 1330 area. But at the same time, the same thing. You had a bearish engulfing candle today, and lower highs on the RSI, and you got an MACD that's flatlining, and you have a stochastic that's making lower highs, lower lows. Again, I don't really know which way this market's going to break, and I don't think a lot of people do. I mean, you might say, yeah, gold's going to go up because of the problems. But right now, I think the buzz is deflation. It's not so much, the focus isn't so much on just currencies being trash. It's the focus is on deflation, and gold and silver could get whacked in that environment. So be careful and have a great day trading, and I'll be doing this again tomorrow. Have a good one.